Okay, let's get started. Again, welcome everyone to come to this panel discussion. From the beginning, I want to thank the RISE organizer for organizing another very successful meeting. So I think today our main focus is a cross-border investment. I think we have a very diverse panel. Hopefully we'll share something which is useful to the audience. What we'll do, have some brief introduction about each panel, their personal background, and also their company or fund. And then we'll, talk a little briefly about their prior experience working with the various Asian investor, and also some of the experience working with the entrepreneurs or biotech company. And then we'll open up some questions if the audience have questions. And also we have additional topic we can cover. We have more time. So having said that, we can start with Carl. Yeah.
Hi. So my name is Shardul Jan. By the way, if you're looking for Tim, I'm not Tim. My background is in pharmaceutical sciences. I'm a homegrown talent. Got my PhD from Northeastern University 6-7 years back, and since then I've been in pharma company working mostly in formulations, but for the past 5 years I've kind of morphed my role from formulations moving into BD and BD&L activities, and since past year or so I've been employed at Luye Pharma. Luye is a Chinese-based biopharmaceutical company. It is listed on Hong Kong Stock Exchange and has a headquarters in Singapore. The company has its corporate office in China, including state-of-the-art certified GMP manufacturing facilities, BD teams, commercial teams, legal. And I work from their Boston Innovation Center, which was established last year. And that's the background. The company has its portfolio in 4 major areas: cardiovascular, oncology, metabolic diseases, and CNS. Thank you.
Yeah. My name is Darren G, and thank you, RISE, for inviting me to the panel. I wear 2 hats. One is I'm a venture partner of LeadEdge Ventures, helping them to assess, scout, advise opportunities for investment. I'm also CEO and founder of LP Science, which is a cancer immunotherapy company, joint founded by LeadEdge Ventures and also backed by 2 major PEs out of China. My background before I joined LeadEdge Ventures as a venture partner, I was a global VP for Roche. I was managing business development for 130 countries, essentially Asian emerging markets. Before that, I was also an entrepreneur. I was founder and CEO of PharmaLegacy Laboratories in Shanghai, and spent years in UK and also US. Spent a short career, pretty long career in fact, in Procter & Gamble Pharmaceuticals. Educated as a physician but never practiced. Then got a PhD in England, an MBA from University of Chicago.
Bruce Cohen. I'm an advisor to Zariah Capital. Zariah is the life sciences investment unit of the Sovereign Wealth Fund of the government of Malaysia. We have about $800 million under management. We're investing out of a $300 million allocation now. Like most sovereign funds, it's an evergreen fund. We invest broadly in healthcare. We don't really have any specific sectors. About 80% of our investments are in the United States. The rest are in Europe. We have 1 investment in Asia, which I'm also, like Darren, wearing 2 hats. I'm running one of our portfolio companies in Singapore because I wasn't paying attention on a conference call one day, and I was nominated to be CEO to replace the management team. Don't multitask at night. We, typical bite size for us is about $5 million first investment. We'll, like everybody else, will reserve 2 to 3 times that. And even though our money comes from the government, we are not an economic development agency. We, like most sovereign funds, we invest for return.
Hi. Hi, I'm Flora Yao. I'm the co-founder of the Ivy Elite Capital. It's a Toronto-based venture capital, and we are very few venture capital firms in Canada to do the cross-border investment and highly focused on the biotech and the life science industry. Currently, we have 2 funds on hand, and the first fund was invested in the IT, biotech, and clean tech, and the second fund is $300 million, and only for the biotech and the life science. And we actually normally invest in a little bit late stage companies, and we help them. We directly invest here, and then we bring those companies to China. We closely work with the Chinese hospital and Chinese local governments and central governments, and help them to grow, to expand and grow in China. Before I step into the venture capital industry, I actually come from the strategic management consulting industry and served the biotech industry and the energy industry for almost like 10 years.
Okay, my name is Andy Lee. I'm the currently CEO and the founding partner of the Biosense Global, which is a small investment team in the U.S. We typically invest in early stage biotech and medtech companies. So far, we have made 4 investments from this team. In addition, I have another role as the China biotech company in Suzhou. For that company, what we do is we'll license a project from US, Europe, and then bring to China to generate more data, hopefully get approval in China, and then in the future commercialize it. But that particular venture is mainly focused on biotech and drug development work. So from my personal background, I came to this country about 30 years ago, and I did my PhD in biology, and then decided to go to industry. So I went to business school, then joined the Glaxo. Then after Glaxo, joined Abbott, and then Daiichi Sankyo. Mostly doing R&D management, from a project manager, project leader, and also BD, and also a number of other things. We started our own company about 2.5 years ago, and I think it's fortunately there's some good opportunity up in China, and bring out. There's a lot of kind of interesting opportunity that I think that's what we're going to discuss today. Probably focus a lot of the topics on that. Having said that, maybe we'll just share a little bit besides my understanding based on previous RESI panel discussion, most focus around China. I don't know, based on your own experiences, I'm asking the panelists if you have other Asian investor you want to cover besides China. I know Darren mostly focused in China, me, and Laura also. I don't know, Bruce, you want to talk about some other?
Yeah, so we invest worldwide. I think our sense about the trans-border stuff is that we take a view in our looking at our investments that if we're going to invest in a company, it has to have a strategy for Asia. So we don't really care where the headquarters of the company are. And we were saying on the hallway, like a lot of people were a little bit nervous about investing in China because we don't have a particularly broad network inside the country.
Right.
But having said that, we're at the point now where if somebody comes and pitches us a deal and it's 90% of their focus is the United States and they have a few random thoughts about Europe and they don't talk about Asia, the conversation ends pretty quickly.
Yeah.
And so our view is, and we've been historically a device-centric fund, and we think that the tide has already turned where you can be a successful device manufacturer without ever launching in the United States. because the market in Asia is so gigantic. And Europe is still, I'm going to offend somebody here, somewhat of a theme park when you get right down to it for the kinds of investors we do. It's just way too complicated. But our view is that you have to be thinking about the emerging markets in Asia and not just China.
Yeah. Okay. That's very helpful. I think probably a lot of audience, based on prior experiences, certainly have a lot of interest in China, especially considering what is happening there in the last 2 years. Probably for the next 20 some minutes, we're going to have a lot of discussion on China. Maybe from there, Darren and Flora, you guys want to talk about what's the typical Asian, or in this case China investor, and how they you have worked with some of the China investor and some Western investor. Is there anything you think that maybe a little different? So the audience here, they can learn something how to, if there's anything they need to pay attention to work with the Chinese investor.
Interesting, 10 years ago, or 11 years ago, when I founded the first company, PharmaLex in Shanghai, we provided services. Getting funding out of China from VC is very difficult. So we brought private equity firm actually from here, from Boston to China. I got 10 million invested in the company, built a facility, started providing service. That was pretty sizable investment actually, if you think of 10 million back in 2007. What changed in those 10 years? Now you start up a company, biotech company in China, you raise 10 million in Series A, you feel like you're a little potato in the whole sea, like you don't even feel like you have the rights to talk about setting up a company. The market value for biotech, especially around the innovative biotech in China, for good or for bad, is really floating up all the value around the world. I think Andy, you and I, a group of friends yesterday were talking. Even that float up the infusion in US by 40% just by funding from China. And many of the companies now setting up in China, starting as a biotech, we're talking about 50 million, a round, 100 million, 150. So size is one of the things I've seen the trend of turning, actually just last probably 3 or 4 years, with a lot of capital in that market. Where do they come from? Real estate, IT, mining, all the others, hot money coming in. And that's not just China money. You see a lot of investors outside of China, like Arch Ventures and OrbiMed, of course, it's active, investing into that market as well. So what changes, I see 3 things. The science, and I talked about, it's really a lot of energy there. The recognition of the market. When I was at Roche, China market still a tiny bit. So China was one of the emerging markets which I led for partner activities together with Japan. But now at Roche, I just learned, I single out China as pack of China, Canada, Mexico, and Eastern European countries as out of the emerging market. So that's the recognition. And I think the third is the recognition of innovative medicines in that ground, especially by change of regulatory policies that allow new drug to get approval a lot faster, and also use the data generated outside of China for China filing. So it both benefits patients, but also benefit many of the companies who are trying to bring new medicines to that market. The market is big, so I see those are 3 opportunities or things changing in the last few years.
Yeah, totally agree with Darren, and add 2 more points. When we set up our first fund 3 years ago, I remember the fund was almost like 8 to 10 years, very typical North American fund. But when we set up the second fund last year, most of our LP actually come from China, at least half. And we found like the investment cycle is very, very different with here. The investment cycle in North America is longer, it's about like 10 years, but in China, actually 5 years is longer enough. So our second fund is about like 5 years, 3 years investment and 2 years exit. So that means for those Chinese investors, they want to see the return in a very short time. So for those companies who want to go to China, the timing is really important. We talk to many companies which are in early stage. Actually, we don't think it's a good time for them to enter China without any like the FDA approval or even just start the phase 2 trial. It's too early for them, and we cannot wait such kind of long time. And another point is the stage. From the investor perspective, if we only invest in China or we only invest in North America, yes, we can wait. But if we do the cross-border investment, actually we cannot wait. The Chinese market is pretty crowded now. If you are quite slow, then it means you will lose the opportunity. Just like we talked to some, last year, a platform company, health management platform company, come to us and they want to go to China, but they cannot handle such kind of big data and they cannot handle the whole market. So then this year when they come to us again, they found like in China there are so many similar platforms come out. So that is the problem. So I think from my perspective, I think for those medical companies, if you really want to go to China and if you really want to reach out the Chinese investor, try to think about your time. If you are too early, if you are still in the early stage, just wait until you get ready and talk to them, because within 3 years, we want to see the return. If you cannot make the return, that means I fail in the deal.
I slightly disagree, but you have to have a product ready, because just for sake of the debate, because the different company have different appetite. The company I'm running now, we raised so far close to 80 million. We are really driving for innovation. So any early stage innovation, actually, if it's first in class, novel targets, that really get us excited. I can cite a few more companies like that. So depends on, I think, appetite of the partnership.
Yeah, just a quick question. But are those companies from North America or they are just Chinese local company?
Which company the company want to come to China?
Yeah.
Well, we look for partnerships around the world, US, Canada, European. So we are a bit, of course, all the partnership deals, you want to have as later products as possible, right? If it's a dream to get phase 3 deal working, unless someone else doesn't want it. It's very hard to get phase 2, but as you drive for more innovation, early stage right now is more sweet spot. I look a lot more into European as well, because one company, 5, 7 people, 10 people can have very interesting technology that can be a partnership. You see a lot of VCs out of China and portfolio companies go into those type of assets to strike up a deal. So I would say, Flora said wait. I said don't wait. But we're still friends.
And I would agree with Darren. I should have said that earlier too. One of the goals for Louis Innovation Center in Boston is to scout new technologies that can be integrated into our existing portfolio, with launching of the product in China market first and then coming to other countries, including US. So our investment thesis is focused on testing new markets with a low price point. And we have invested in assets that are in preclinical stage to phase 1, phase 2 stage, with the intent that we can take on the manufacturing. The only thing I would add to is, as an investor, we are looking into companies that have strong IP landscape, and we have been burned several times where companies do not take that seriously, and won't have a strong IP in China, or won't have the IPR in China. That has killed a lot of deals in the past few months.
Okay, I think those panelists covered some important point on the point. I think when you go to China, when you talk about anything in China, do not generalize too easily, because it's a huge country. It's very, very diverse in terms of investor appetite, in terms of their investment strategy, and the focus is very different. Okay, depending on who you talk to, you may get a different impression. So hopefully, I mean, for most people, you'll be able to find someone fit your kind of a profile. But how long it will take you to find that one is probably depends on how lucky you are. But usually, you come to one of us.
And also how beautiful you are.
Well, that's a separate issue. We can talk about that later. But basically, there's a lot of investors, especially in the last 2-3 years. So probably, I don't know, Darren, you have any numbers? I mean, several hundred funds probably at least, right? Focus on the biotech, something. If you go back 5 years ago, maybe limited, maybe 20-30 funds doing the biotech. So it's very different.
Hundreds.
Yeah, and also each team, their level of understanding of technology is very different. Okay, some place you go to, you can talk to them. They have people trained in the U.S., Europe, and they can speak your languages, no problem. But some place you can go to, they probably cannot even understand your slides in English. You have to someone translate for them. But they have tons of money. So it really depends on what you come to the investor looking for. Whether you're looking for money alone, or you're looking for someone to help you get into China besides money, or you're just looking for the China opportunity to have someone bring the product to China, and you will focus on doing the U.S., Europe. So you have to understand what you're looking for, and then hopefully, you try to find someone to fit your profile or to help you, guide you to the right place. And certainly, I think one of us hopefully will be able to help you. You have a specific question, what you're looking for, and to tell us, we can help you, make some suggestions. I think we talked a bit about what's happening in China the last 2 years. I think from my perspective, there's a few things happen really drive this round of a boom. Certainly, one thing is about the regulatory environment changes. We're not going to spend a lot of time because I think the next panel, starting right after this, will be talk about specifically what happened in China. The bottom line is right now they're trying to do something similar to U.S. and Europe in terms of the regulatory environment. I brought the 2 drugs to China, one's Humira, one's olmesartan. Humira took us about 8 months to get IND approved in China, after you already have an approval in U.S., Europe. That was very, very fast. That was about 15 years ago. And now I did it, olmesartan. It took us 28 months just to get IND approved in China. And that was 8-9 years ago. And a few weeks ago, I just got a WeChat from one of the people working in Daiichi Sankyo in China. They sent me to say, oh, the drug got approved in China after so many years. But right now it's very different. Right now, I think the latest is you have a 60-day waiting period after you submit this IND. If you don't hear anything in 60 days, you can start in the trial. It's a huge improvement. I think that's the first driver. Second driver is about the Hong Kong stock exchange listing policy. Basically, that give investors some opportunity to exit. I think that's another plus for the market overall. And then certainly we can talk a little bit of some people have some worries and concerns about the market, but I think in general it's a plus. So I don't know what about you guys think about based on your own experience. Anything else you want to cover, or you don't want to talk about Hong Kong? What's your perspective on that? Darren,
We were all excited about Hong Kong for a little while. It is they are providing this NASDAQ-like platform, so Asian investors, if they don't want to go out too far to New York to invest, they can invest in biotech without profit, right? So we have 2 companies listed as the first wave. Neither of them doing well. So there was a big hit that we were hoping the market can really provide a good public source of capital based on the initial listing. I personally now a bit more concerned about the next listing because there are, I think, 6 or 8 in the waiting list. And if they can fare well, then the market can really truly be an exit strategy of biotech. If they don't, then and it's bad, then everything has to come back to NASDAQ. So I think a lot of careful watch about how Hong Kong market is going to be for biotech companies. It's too early to say.
You said there's only 2 companies listed in biotech?
Right now, it's 2 companies listed. First one is Ascletis, HCV drug producer. Second is BeiGene. BeiGene is doing better than Ascletis. But by the end, everybody looking at it saying you have to fear the price of your company. Investment banker, underwriter has to do a better job. But sometimes the market will not feedback until you got listed, right?
So isn't there a particular valuation that you have to have before you can get on the Hong Kong market?
It's very
300
low.
million?
It's actually the bar is after listing, if you hit $200 million US dollars as a market cap, you'll be fine, right?
I thought it was 3.
Well, maybe the change to 3. even that, right? The Ascletis listing was $2 billion US dollars as a start. So the stock price was just halved in a few days. Still, close to $1 billion is a very sizable listing, even in NASDAQ, right?
Yeah. I think that's part of the concern, the valuation there, what is a realistic valuation, whether the market itself can support it. Because of Hong Kong, I think investors there, a lot is not as sophisticated as the NASDAQ or not even the Europe. A lot of people are concerned, how many people really understand it, or just chasing the hot stuff. That's a concern. Especially in the coming 2, 3, 4 years, a lot of companies will face the reality. Whether their phase 2, phase 3 data will come out, whether it will meet expectation. I think right now people are just seeing the rosy part of the picture, did not see the ugly part. But unfortunately, in this business, most of the drug will not work out, unfortunately. And I don't know how much that's been reflecting the current valuation. Probably not. A lot of us like just focus on the positive. What's the upside? Whether the market can handle that kind of a negative news. That's another thing we need to see.
How about device companies? Do you know how many of those are listed in Hong Kong? Medical device companies?
Yeah, there was one, Grill, right? Was that it?
Well, Grill is supplying, right? And they haven't got listed yet.
I thought they did. No, not yet.
They did. Oh, maybe I'm updated. I haven't seen much of the news on that.
Right. I know there's Darren said there's over 300 companies waiting on the list. There are a bunch of device companies.
Right.
And certainly they are open. They are also fit in the category. Yeah.
There's a bunch of people in the U.S. that are preaching there's gold in Hong Kong by listing on the Hong Kong markets.
Yeah.
Saying that there's huge valuations and with big guaranteed underwritten deals that they're selling. These are all consultants that know people in country, right?
Well, it's a good thing, right? Getting some attention there. For BeiGene, right now has market cap probably $8 billion in NASDAQ, and they decided to go to Hong Kong to do a parallel listing.
Right.
They raised $1 billion, so that was good. In fact, recognizing by the Asian market, but it was offset by 10% drop at NASDAQ of the share price. So it's actually collectively the cash flow, the cash in was not, market cap is not that much change, but they do get additional $1 billion out of Hong Kong market, and looks like they're remaining strong. And besides Asian market and China market, stock market has plummeted like 40% in last month. So,
Right.
so I think it's a healthy exercise. Just testing how strong the Asian investors toward the high tech, especially biotech, and see how market. Actually, for Excalytis case, I think it's the right rational correction of the market. If your value is not that high, it fall back to what a fair market value is.
What's the symbol of that company? Do you know?
Beijing?
No, Excalytis.
Yeah.
Uh,
Or how do you spell it?
ASCLETIS.
Thank you.
Yeah.
Yeah. So I think we remain to be seen what's going to happen there. And another trend is besides Hong Kong, I think in mainland China, and right now, and before Hong Kong, this new policy, all the companies this year need to have a revenue and a profit. I think this is the first wave of the non-profit company can go there. And then I think the mainland is also considered to do that, allow the company, a non-profit company to list there. We don't know how long that will take, but certainly they want to open that door as well. So that will certainly help attract more investment into the biotech area. Yeah, that's another thing you may want to know. So I just want to open the, to the audience whether you have talked to other Asian investor, or you have some question or experience you want to share, or you have some challenges you're facing. Specifically, maybe talk to the China investor. Yeah.
I want to know where one can get more information about the market in China. Specifically, if you look for the number of neurosurgeons who do epilepsy surgery. Like, where can one find that kind of information?
Market information?
Yes.
So we can help you with that.
Oh, great. Thank you.
Well, I think it depends on what kind of specific market information you're looking for, right? I mean, something you can easily find online, and it's something you have to go to a specialized consulting company to help you get that. Yeah, really, that's a pretty general question. Yeah, most things I think you can find it online. Yeah, but if you get very specific, probably you need someone to do some more digging for you.
Yeah, you need someone understanding Chinese. China is just like US or Canada has different level of societies, like ASCO is for oncology, right? Neuroscience, probably neuroscience society. In China is very tiered hierarchical society, and each category will have their main conference, their website, their membership. It's probably like China's ASCO is called Cisco. It has the biggest coverage of clinical clinicians in oncology.
But the clinical society role between China and the US are very different. So what the society, in the clinical society like ASCO, what kind of data they put out, the report they have, versus the role of a Chinese ASCO equivalent, what kind of data they produce. The roles and functions are very different.
I'm not sure what role and functions. I think management is different.
In terms of, it's the U.S. clinical society tend to have produced this report with very well-defined data of its member, of its specialty, its interest, and then it's very academically driven and clinical evidence driven. Like if you have a new procedure, the U.S. Clinical Society will drive for that evidence by organizing the key opinion leader in that segment. But in China, it's so regional, a lot of regional turf specific. And to have the whole society to adopt a clinical guideline, it's not that easy. And then they don't publish a lot of data either because their meeting is heavily commercialized. We've been involved in different activities within the Chinese clinical meetings, and that's, we also have been involved with the US side, so we find the kind of data coming out is kind of different. That's our experience.
Well, you're driving in US or Canada, or you're driving in Shanghai or Beijing, right?
Yeah.
it's very different rules. And personally, I like to drive in China because I got a lot of navigation going. I can watch, I can sense people. That interaction is very strong. I'm using this as an analogy. The Cisco meeting is actually going to be held in 1 week in Xiamen, every year in Xiamen. Format-wise, it's very similar to ASCO. All the clinical trial data, China-specific, will be there. Many of the review panels on immuno-oncology, recent advancement there. But of course, that comes to different level of practice. Different hospitals and different investigators have different type of trainings. But these years, I've said, the last 20 years has a lot of training coming from Roche, BMS, Pfizer. So many of the investigators are doing exactly the same thing as the US physicians, but they are not as sometimes proficient as US physicians or surgeons. So using the analogy of driving, there are different rules, but there are common goals. The common goal for them is essentially to share data, to have the right recognition of the latest advancement, and have the right therapy. So I don't see that's different. The semantics, how they achieve there, how each hospital is practicing, that's different. I think a lot of procedures, and my company is conducting clinical trials, it's certainly a lot of headache to get major PIs to buy into your protocol, and usually you have to use your international influence to say this is harmonized against the international trial, so you have to do this. But those are semantics, right? By the end, it's your data result, clinical trials, and their publications.
Can you guys talk a little bit about the intellectual property issues in China? So I've gotten Chinese patents before on medical devices. I've also been ripped off. I've also seen that sometimes it costs too much money, just like in the United States, to actually do something about it. And
You're being enforced it?
Enforce it. So it seems now that it's more important than ever to have the Chinese patents, more important now than those I had, 9 years ago, basically. But for startup companies and people at the early stage, very often you're looking at your patent strategy and you say, okay, I have an Asian strategy, but I can't pay today to file in Japan, get a translation, etc. And so at least some of us are making decisions. I have to do it here. I can't do it there yet. I need the money to do it. So I want to kind of understand the enforcement strategy right now. Like, is it easier to enforce a patent in China than it was before? And when people bruise you to say, you have to have an Asian strategy, I get that. But does that mean you have to have a patent filing today?
Of course.
No, go ahead.
Stop there, right?
Okay.
Right? You have to have a patent to survive the industry.
Yeah.
There's no dispute.
Yeah.
You go through national phase like any other country. If your patents going national phase in the US and in Britain, then you got to do it in China unless you want to abandon the market.
And that's why I said you guys should wait. Yeah.
But you cannot wait. The thing is, once you have a filed PCT, you have a certain time for national phase.
Right.
So basically, I think now you should treat China as the equivalent of the US-Europe. What you need to do US-Europe, probably you need to think about the same thing. And before, in the big pharma, up till the last 2 years, the things have been different. In big pharma's US, Europe the first wave, and Japan usually the second wave, and China and Brazil and some other countries will be third wave, right? And so everything is afterthoughts. But now it's totally different. You have to think about China from very beginning, very beginning of your development. Put that into your category, and also use it for your own interests. But you can use China as a big R&D sources. For example, there's a lot of patients, and to do certain trials, and that's something to think about it at the very beginning, not as because a lot of people still have a mentality, China will think about it later, but now it's a different
Is enforcement easier?
Yeah, that's not an issue, not a problem. I think, again, in China, there's, people always hear some IP issues. There are some IP issues, but China is a big country. It's very diverse. You go to, maybe some people will copycat some of the stuff in a very remote area. But if you work with a credible company, and most companies, they will have a similar respect for the IP as in the US, Europe, okay? But you cannot use a small, isolated incident
Right,
in a very
right.
remote area and say, okay, the whole country is like this. That's
Right.
different, yeah.
I mean,
I
What-
think,
what- sorry.
can I make a comment about the IP? Because we follow all the regulatory IP, and on the IP side, now it become a criminal, a penalty in China for the first time this year. And then the reason the central government is making a penalty if stealing IP, doing
Right.
violation for the first time this year, because China themselves, now finally, they own a lot of IP. They don't want
Right.
others to copy
Right.
them. Before, they don't have IP. When I was at Beijing University, my professor was teaching criminal law, and who sentenced again of 4 back then, it was 12 pages for the entire China criminal law. So, you want IP, what is that? So now it's very different. So you have to, China is 5-year change there is equivalent to a quarter of a century at least in the US. So you have to put things in perspective now for the IP side.
And I think what we tell our portfolio companies is, it's kind of, we're at a point now where when you talk about international strategy, don't waste my time talking about filing in New Zealand.
Right, right.
Unless you're selling a product for sheep, right? There's
Right.
nobody lives there. And,
It's just a quick patent.
right, but everybody still gives the
Yeah.
pitch. We're gonna do
Yeah.
the US, we're gonna do every country in Europe, then we're gonna do Australia, New Zealand. And you say, what
Right.
about China? And they go, well, we'll get to that later.
Right.
And it's the insanity of our history that, and you can, more about patents than I do, Vicki,
Yeah.
but you can file selectively in Europe. And
Yeah.
if your choice is about allocating your money,
Absolutely.
don't do the ones with the hard translations because, if you're covered in the 2 or 3 biggest countries in Europe, nobody that you care about is going to compete with you. So take your money and spend it in China.
Right.
And that's a rethink of people who are just,
Yeah.
they're telling the same story they told 20 years ago. And
The good IP firms now are telling everybody they have to have China.
Yeah, you have to. Right now, if you're looking for a China partner, if you don't know IP, don't even think about it. Nobody want to touch it, yeah.
The important thing, in my opinion, to consider is that China is not emerging country anymore.
Right, right.
It has already made it.
Yeah, well, I think that depends on which area you're talking specifically. I think a certain area is at the same level as the US, Europe, but a lot of other areas still way behind, still learning, catching up. But I think that lady said is China changing is very fast, and the 5-year there is like probably 25, even probably longer than that. Just the things going very fast. So that's why I keep coming to this kind of meeting, you always learn something new. And even for us, we go there very often, we're still learning something every time we go there. Because things change so fast. Yeah. So any other questions from the audience? Yeah, I think maybe we'll just talk a little bit, the people always concerned when I talk about investment is the money getting out of China, because a lot of investors, they have an R&D fund and coming out of China. That has been an issue for some fund, for some investor. I think when you talk to investor, pay attention to see whether they have money in dollar, whether only RMB, and also to see whether they have done something recent transaction. If they only have RMB, how long get them to get out of China? Because depending on the different fund, they have a different way to get the money out of China. The process may take a different time, period of time. So pay that attention. If you really need the money, very short period of time, make sure they have some money in US dollars. But if you have a little bit of longer wait time, that's okay. Talk to the people who only have RMB. Yeah.
And that is a lesson we learned the hard way. And now we have set up offshore accounts various places to help expedite our transactions, because we have done a lot of licensing, acquisitions, plays. So for that, initially we had a tough time because it was very hard to get the money out of China. But since we have established our offshore accounts, the transactions have been much more smoother once we have done our due diligence and term sheet negotiations.
Yeah, I think another trend, Darren, I don't know whether you see the same thing, is in this year, the money is getting tighter in China. Also, more people are trying to do it, but it's partially it's because what I heard is before, when you have a fund come up, and you can go to the bank, ask them to match some money into your fund. But now that source has been dried up. I think the government do not allow that anymore. That's what I heard. I don't know the detail. At least a couple of the fund managers told me that's the reason. It's more difficult together to raise a fund right now in China. I don't know about the other thing, but it's certainly the money, considering last year's compared to last year, the trend and how much money got into it. I heard this year is lower than last year. Yeah, it's a
Well,
little bit tighter.
it's been overheating, right? People ask whether it's a bubble or it's ever going to pop. It looks like the Hong Kong market is not providing well as an exit, and I think that's probably the primary trigger. If the Hong Kong market really boosted all the valuation, then I think money will continue pouring in, regardless of government. But right now, everybody looking for that exit strategy with a concern. So.
Yeah. Flora, do you have any?
Yeah, because we just closed our the deal of our fund recently. Yeah, it's true. The money is hard to raise recently because so many Hainan individual their money was in the previous investment, and it's very hard for them to exit recently. And for many funds, actually, you will see like there will a new round for those funds. Some funds will go bankruptcy, but some new funds will come out. And just as I said, the cycle becomes shorter. Maybe several years, there are still kind of like 8 to 10 years fund, but currently, especially for those Hainan individuals or some family offices, even like some family offices who invested to us, they said like we cannot wait longer than 5 years. So that is a problem actually.
Okay, I think our time is running out. Again, I want to thank everyone for coming, and thanks all the panelists for participation, for sharing their perspective. Feel free to contact us after this if you have any question or you want us to help you make some recommendation or answer some questions. Just feel free to contact us. All right, thanks again, everyone.